So we're going to have a discussion today about China, the new emerging markets technology, Kingmaker. And in order to frame our discussion, we want to sort of very briefly get thoughts from both of you on what the China model is and how that relates to the US model, which we're all very familiar with, and then how that might look in terms of the Gulf model, what's happening here. We're going to use that then as a way to launch into a bigger discussion about Chinese investment into the Gulf, and then also folks from the Gulf looking to make investments into China and points further east. So with that in mind, maybe Winston, you can sort of start and talk about, first of all,
want to do the introductions?
We can do the introductions as well. First of all, let me just grab my phone here really quickly. My apologies. For over 40 years, KenMiller has been a venture capitalist. He has a merchant banking firm, KenMiller Capital LLC. He was a vice chairman at two Wall Street firms, Merrill Lynch and Credit Suisse First Boston. He was also a finance chairman for the US Pavilion to the China Expo in Shanghai. And he's a chairman of the advisory board for the NYU Shanghai program on innovation and creativity. WinstonMa was for over 10 years the managing director of the Chinese Investment Corporation, which is equivalent in many ways to MENA. Now he's the president and CIO of the overseas investment arm of the China Silkroad investment capital firm. He's a member of NYU's NYU President's Global Council and an adjunct professor at the School of Law at NYU. His most recent book is China's Mobile Economy, which is published by Wiley in 2016.
Yeah, I'll leave it here after the event for the library here.
So, with that, Winston, why don't you share with us, if you can, sort of a very brief overview of what does the tech investment model look like in China, and then what are companies looking for from China when they're getting into markets like the broader Middle East and the Gulf in particular?
Okay. Yes, this is more than one book, but I put that in maybe 1 or 2 minutes. I think it's helpful to think about the evolution of the digital economy in China, starting from this policy initiative from the central government, 2013, called information consumption. And at the very beginning, it's very hard to understand what it relates to. But at the very beginning, since it's about China's economy transforming into an infrastructure-driven or let's say export-driven economy into a innovation or consumption-driven economy, a lot of focus was to use information technology to promote consumption. So that was sort of the initial idea, right? So that's the first group of companies we have seen, like Alibaba, as the best example, because it uses the information technology to promote more and more consumptions, mostly through e-commerce. And then, as that evolves, people realize actually these digital platforms also encourages other forms of consumption, non-traditional consumption. Actually, it becomes the consumption of information products. So you start seeing more of those video streaming places, and also the boom of online literature, online novels, which have become a very important source of IP in the information industry in China right now. So it becomes consumption of information products, right? And then in more recent years, after AlphaGo beats best human player in the world in China, everyone's shocked and realized that actually information consumption actually means economy based on information. So it's more like data-driven technology and data-driven new platforms, right? So this is what we are here today. So we see more some of the new, let's say, entertainment platforms are driven by AI technology, right? Like Jinri Toutiao, TikTok in overseas markets, right? So AI distribution model for online contents. And of course, the most latest about this information consumption is this digital Silkroad, right? To extend the domestic China market into the global markets, have more of a interaction with the rest of the world to build up an even bigger ecosystem. So I think that will be the evolution of the investment models.
And if you could just give us very briefly sort of, an idea of what the US ecosystem looks like and how it's a little bit different from China. And I also want to get your thoughts, we talked about this earlier, on Chinese macroeconomic policy as it relates to the Gulf. I know you published some work on this earlier, and sort of the bigger picture of how these investments coming into the Gulf are framed.
Well, thank you. Let me start with the ecosystem question from the point of view of somebody who actually invests in early stage companies. That's what I do. The Chinese word for venture capital investing, 风险投资, means it's very dangerous investing. You're very likely to lose your money. Venture investing in the United States, if you go back before World War II, was people like J.P. Morgan investing in railroads or in Thomas Edison. It was pretty rare, and it was very small amounts of money in the Edison type and big amounts of money in the railroad type. After World War II, we had the beginnings of a real venture investing community develop. And more venture funds came. And now when you measure how a venture fund does, you look at its vintage, the year that it started. Because venture is deeply impacted by the macro environment. So in the United States now, we've had so many successes in venture that we've got not only venture capital funds, but we've got growth equity funds who kind of pick up where the venture firms leave off. And then it goes from there to pre-IPO, and then finally the mutual funds and other professional investors in public markets. In China, when I first started writing about venture in China, it was extremely rare. China, the companies were basically knockoff artists, the Shenzhen market, where it was piracy. But there's a point where quantitative changes become qualitative, and China got so good at it that you developed a whole new kind of company using the maker market in Shenzhen and some of the other, what were originally knockoffs of US companies and then went way beyond. So now China today has a very well-developed ecosystem for venture. One of my friends, who is a friend of NYU, Xu Xiaoping, runs a company called the Zhen Investment Fund, which is an angel investment fund, has maybe 500 active investments all over China. And then there are funds like Renaissance Capital in Shanghai, which are growth equity funds. So when I taught at Beida at the Guanghua School for a while, that was maybe over 10 years ago, kids wouldn't think of starting a business. Their parents would kill them. But now with these successes, more and more young talent is flowing into venture, and there is this well-articulated, I would say almost as well, if not as well articulated as in the United States, ecosystem in China that works.
If I may maybe add some China comments on this. Because China is in some ways kind of in the middle of US and UAE. In the sense that on one side, China's ecosystem is also heavily supported by the government initiatives, just like the UAE market here. The President Xi in his every speech focuses on innovation, and Premier Li actually went to one of the industry parks, had a coffee with local entrepreneurs and actually made that brand of coffee as a quote-unquote premier's coffee brand in that industry park, just showing the support, right, of that top-down approach. But at the same time, the ecosystem in many ways is very similar to U.S. system Ken described. It's also very bottom up, or maybe sort of middle up, because at the center of the ecosystem is a group of graduated entrepreneurs from the first generation Chinese internet companies. Could be in some ways knockoffs, but they graduated because they matured. Because for these people, either they worked at Alibaba or Tencent, some other large companies. Either they feel they are financially secure enough to take on risks themselves, or they feel like I did this, I can do a company myself, right? So there's a lot of these people are setting up the new companies, and they are the most valuable piece of this ecosystem because they attract the VC money, and they attract the young talents, the freshly graduate students to join those places, and also in some places they have some financial accumulation themselves, so that they can become their own angel investors, or they can be the angel investors to some of the people they know, right? So that group of people is really, really important. And relating to that, I think this morning, Rajesh and his lab, did this kind of finalist startup pitch presentation session was really, really valuable, because for this ecosystem to work, you also need to have this first generation graduated entrepreneurs, and then based on that, right, it will be like the Chinese group in Shanghai or Beijing, or like the Google gangs or the PayPal gangs in Silicon Valley, to drive the ecosystem moving forward, attracting other kinds of resources.
No, I totally agree with that. And, in the early days of venture in China, the government was trying really hard to create an entrepreneurial ecosystem. They would pour capital into regions as if Silicon Valley was a place and not a state of mind. Silicon Valley, when it started, had a lot to do with drugs, sex, and rock and roll, and also the defense industry. So the defense industry had part of it, but the early attempts looked like they weren't working in China. Some of these regions, kind of bombed out. The 1,000-man talent program, where scientists were paid to come back to China, they didn't stay. But now it feels like critical mass has been reached, and the models of businesses are coming together, because in the United States now, after Amazon Web Services, you can do a quick, cheap startup. It's called a lean startup. And so in a way, it used to be the Chinese would build the bicycle while riding it. They just get out there and go into business. And now U.S. companies are starting to, in a way, emulate that approach, wouldn't you say?
Exactly, yeah. If we say first generation is copy to China, it's a Chinese version of Yahoo, Chinese version of MSN, right? They become the Alibaba or Tencent and WeChat, right? But the second phase is more actually two China copy. So it's earlier was C2C, now it's 2CC, right? Two China copy. Like for example, some of the new features of Facebook clearly copied from Tencent WeChat, because over there there's a lot more users, and the apps listen to the feedback of the users and make it a really sort of user-centered experience. Yeah.
Let me ask, we discussed this when we were on the phone earlier, that China, when the move came into the GCC, the move initially was the government to sign an MOU for the Digital Silkroad Initiative, and this is part of the broader Belt and Road Initiative built around infrastructure investment from China to Europe. And now we've sort of have already also seen the major players come into the GCC, so the Huawei's, Xiaomi's, Tencent, for the companies that are smaller companies in the ecosystem.
Right.
What kind of intervention are they looking to make here? Is the GCC a market for them? And some of the things we also talked about, I'm just curious your thoughts on this. Culture, language, human capital. When we're starting to knit these two regions together, how do we overcome some of these issues to grow trade and to grow the relationship?
Yes. In digital Silkroad, we have seen multiple layers of cooperation and also multiple layers of business already ongoing, actually. So first of all, it's about the e-commerce, right? So every year, November 11th is the Singles Day, 24-hour e-commerce kind of shopping extravaganza, right? Last year, more than $30 billion GMV, gross merchandise value, were transacted on that day, right? But what's important is it's not just China play. Actually, brands, vendors, merchandisers from more than 200 countries participated in this thing, contributing to sort of collectively made this 30 billion GMV in one day, right? So when you think about that kind of ecosystem, it is very valuable to a small brand in a remote market, right? So that's one part of it. And another aspect you can naturally think about is on the hardware side is the spread of smart devices, right? So you mentioned about Huawei. Huawei has been entering into the MENA area, or in India, right? The Xiaomi, Oppo, those brands, they're also into the market. But what's interesting is it become very much a two-way because clearly, India has been a market to the Chinese brands. But at the same time, some of the Indian entrepreneurs, they also got inspired of those kind of story, in particular Xiaomi, and they created they created their own local brands. But interestingly, they also sourced some of the components from the China market because of the made in China expertise in China, right? So over there, you also see these kind of market and innovation sort of happening at the same time. And there's another area of potential cooperation, which I think it will be really, really important, is to connecting the large ecosystem with emerging markets entrepreneurs. Because a lot of the startups in smaller markets, right, they start with a smaller number of users and a fairly narrow market, right? By comparison, in China, the top 10 most actively used apps each has more than 300 million active users every month, right? And the top one, WeChat, has actually more than 1 billion. So when you think about that kind of setting, essentially you have a better, bigger lab, when you connect an entrepreneurial with that, with China's ecosystem, because for new ideas, for new ventures, they will be able to get feedback more quickly, and they probably can achieve scale more quickly.
Yeah. If I may comment on that, I think I see what you think about this, Winston, but what comes after angel investing is an A round, a B round, a C round. The problem with startup businesses is, particularly in tech, is they don't go cash flow positive for a while. So they keep relying on the capital markets, and macro crises can affect their ability to even survive. And when you think about it, so I'm not that optimistic about Chinese capital coming into the Gulf to do venture. Because when you think about it, business is based on trust. It's much easier if I'm Chinese for me to check out a Chinese entrepreneur. And I can do a local investment where I understand the whole environment better. So in general, there are a lot of venture funds who just invest in their region, or they invest within certain silos that they know better. So I think you said this earlier, these big Chinese companies may come here and snap up littler companies or invest in littler companies that they want to outplace the risk into. But for a general angel money coming from China to here, I don't see it happening tomorrow.
That leads to a very interesting discussion about cross-border investments, right? Because yes, traditionally we typically see funds focusing on their own territories, just their expertise. At CIC, I set up a vehicle in Silicon Valley, West Summit Capital, to do cross-border investments. The idea was to put China capital into U.S. Companies, and then link the U.S. technologies with the China market and the China demand to make it a win-win. Right? And when you think about what we did, actually, we started with, we teamed with a group of US-educated Chinese entrepreneurs, right? So you need to really have people who understand both sides to make that work. Now, I'm very glad, Ken, you make this question, because I think since we're sitting in NYU, which claims and actually acts as the only global university in the world, actually, this is sort of the direction we look into, right? To create next generation talents that can cover different cultures, different regions, to make cross-border investment work.
Let me ask you another question, if I may, Jonathan. I have a Chinese friend who says that it's much more important in China who your investors are, and the entrepreneur, by contrast to the investor, is less important in China. Certainly, at the angel stage, you just take the money anywhere you can get it. But as you start to grow, in both countries, you want to take the money from someone who can help you.
Right.
And while the government is not insignificant in the U.S. economy, I would say that the national and local governments are much more significant in China. So how would you comment on my Chinese friend's observation?
Yes. No, because I think that comment it relates mostly to considerations of exit strategy, right? Because in China right now, several large companies have dominated the traffic flows. So it's very, very expensive for young startups to try to gain scale and acquire traffic flows, users. So for a lot of these startups, their contemplated startup exit strategy is to sell one of the largest companies. So their hope is, maybe this is kind of just speculative, but their hope is, right, if they are being invested by the top names, and very likely these guys have the connections with the large companies, and when there are two, let's simplify, right? Let's say two different large companies are backing two small startups, and they're like competing fiercely on price war, burning cash. If their investors are powerful enough, and in the case so powerful, actually they invest in almost all the countries, all the companies, they may actually mediate some discussion to stop that price war, or to negotiate some buyout without going to like a lose-lose battle, right? So I think it's mostly related to the exit.
Right, and since you mentioned the public markets, our public markets are always technically open. They aren't always open in China. The government can shut them down.
That's right. So IPO is not a reliable exit strategy.
But either way, you can set up a venture fund that depends for acquisitions on its exit. So that's what Contour does. They'll invest in companies that'll sell out once they're worth $100 million to some other company. But I think in China it would be iffy to found a venture fund that is based exclusively on IPOs for exits, initial public offerings for exits.
Exactly. Yeah, because domestic IPO is not very reliable because the government controls it let's say micromanages it. So therefore, quite some startups, right, would set up as a US dollar vehicle, offshore vehicle, so that they will go get listed in NASDAQ or Hong Kong, right? But your point about the government influence, right, is very tricky. Because a lot of times government provides maybe too much incentives. Encourages too much risk taking, so a lot of cash just got burned without leading to anything. And another aspect of the government influence is the mutual competition for talents to get people here. So actually, so on that point, that point maybe is also relevant to MENA and let's say UAE particular, right? Since you have different centers competing for startup talents. Yeah.
Let me ask you on this point.
Yeah.
So, one of the very common models for multinationals, startups, companies coming to the region is to use either Dubai or Abu Dhabi as a hub, either through a free zone or through a tie-up onshore. What do Chinese companies that are coming here look for in terms of JV partners? So people who may have capital that they want to share and partner with a Chinese company that's coming here, and then vice versa. We're talking about outbound flows as well. So family offices here, investors here. When capital wants to get to China, and I know we discussed this a little bit on our call, where do you go to meet the people to form the relationships that you're going to do business with and create these cross-border deals?
Right. No, I think that's the very first level is to get the next billion users, because for the internet giants of Silicon Valley and China, for historical reasons, they have been dominating their own territories. And even within China market, the internet giants are competing fiercely among themselves. So they have to find the next billion users somewhere else, right? And that will be the emerging markets with the infrastructure, and not only in the infrastructure of telecommunications, but also in infrastructure of mobile devices, and the infrastructure of applications, and also the infrastructure of digital literacy spread, right? So for Middle East, right, if you think about it, comparing to some other emerging markets actually come up at the top. So it's very natural to think about this market as a very important user market going forward. And secondly, Chinese companies have done quite a bit of global expansion and investments during the last decade or so. So a very important lesson is precisely what you said, right? The cultural aspect. Very few overseas investments got successfully integrated. Actually,
So they're coming with their own capital, or are they looking to partner with investors?
I think they seriously know they have to partner with local people, because you cannot just sort of come over and say, we copy the model and we can run all the business in our own way.
Yeah, and I think in terms of partnering, if money from this region is going to go into China, it might make sense to find unless you're staying within a vertical that you know well, like consumer or retail or airlines, it's better probably to have a Chinese partner to do it with. And this is a good time. I mean, things are tough in China right now. Capital flows. The government keeps trying to step on the lending, and then they pull back because they're afraid of domestic unrest. If somebody from China came with capital to the region, you would say, well, I mean, there's enough capital in this region. And there has been a great deal of capital in China for early stage investing. But I would say now would be a very good time, if not for the very earliest stage, maybe for growth equity. So to do a partnership with one of the existing growth equity firms in China, this would be probably a great time to step forward.
So we're not talking about very early stage, or we're talking about sort of a more mature investment?
I would think so. But I mean, I think if you want to do early stage, again, you could partner with plenty of good venture funds, and you would have a very robust menu of opportunities to invest in, wouldn't you say, Winston?
Yeah. Yes. Yeah. Because venture early stage investments, as Ken has experienced for many years, is very much a large number game, right? You need to invest in a large number to wish to get a few good wins, and then altogether you get a a reasonable return. So when you go into China, either like a Middle East capital going to China, either it will be like a later stage unicorn, right? So you can do a large size equity check almost as if it's a PE deal, right? Or like if you really want to sort of go into the early stage, try to cover the innovation ecosystem broadly, then you probably have to set up some VC vehicle, with some partner there to invest into a large number.
Yeah, I think when you say it's a numbers game, what you probably mean is that one of the riskiest things you can do is invest in only one early stage company.
Yeah, or even one specific sector. Right. Yeah. So for example, several years ago, O2O, online to offline, was very popular, or sharing economy was very popular. But if you just only focus on that, actually you end up probably lose almost all the investments.
We're going to have to close there. Unfortunately, we're out of time. I'm sure that we can carry these discussions on offline and answer any questions that you all might have. Thank you very much. And
sorry, we do have time for one or two questions, though.
Please.
Sorry, this was really, really insightful, and I wish we could kind of have continued, to be honest. And I kind of wish I could hear Ken and Winston speak in Chinese to each other as well. Yeah, Ken actually does speak fluent Chinese.
He did.
But we will take one or two questions. So there are some mics that are roving around. Nahal, do you have the mics? Yeah. Does anyone have any questions? Oh, sorry. Okay, so find the mic closest to you, which is either here, here, or here. And if you have a question, Yep, there's a mic right there.
There's a hand there. Yeah.
And there's a hand there as well. Okay, so we're going to start with Tiberiu.
so just head to the mics and then we'll go from there.
So, my question relates to the category of startups that are predominant in China versus this region. This region initially started looking at Silicon Valley as a model, and they were looking mainly at software-related startups. And Dubai is a proof of that. But now Abu Dhabi, for example, is looking at a place such as Shenzhen and more towards hardware-related startups. Can you explain to the audience here why there's a much bigger appetite for hardware startups rather than software startups now in China? Like, for example, in Shanghai, instead of going to places such as co-working spaces or incubators, you go to places called hacker spaces,
Right.
which people here are not so accustomed to. And that's where hardware startups actually grow.
Okay, so several background points, right? So number one, actually not everyone knows, right? Actually, within the universe of unicorns, hardware unicorns only represents a very small percentage of the unicorns because it's much harder. And China, with its 30 years of made in China story, wasn't related to smart economy, but nevertheless, right? The manufacturing, sourcing, distribution capabilities of manufacturing value chain provides the backbone of today's smart hardware capabilities. And second point is China. The software aspect is, especially the to-B side of the software business, is a weakness in China. Actually, in China's unicorns, right, very few of them are related to-B software. Actually, most of them are in the U.S. So that's also part of the reason that China's startup universe will put a lot more emphasis on the smart hardware aspect.
I was just going to add that I was just in Shenzhen, and I think part of the reason for the emphasis on hardware is that there's a revolution going on in 3D printing, and it's very exciting. So maybe that's the answer to your question.
Hi, I have a question for Ken Moore, well actually for both of you. Here being at the heart of the Silk Road, right? As a venture capitalist who I'm running around the Middle East raising money, which is being invested in the US, and sometimes I'll see people here investing in China. How can we as a small region with only 50 million people position ourselves better to try and get more of that capital inflow from the US and China here? I'd like some thought on that.
Well, I would put the question back to you. What argument could you make that there are special attractions? If you said, for example, there's a revolution going on in alternative energy technology or oil extraction. When I was in China recently, I had a presentation from a company that's using biotech to extract carbon fuels from the ground. But you have, I mean, it's just a marketing question. You have to come up with some argument about why the Gulf is the place to put early stage capital because of one reason or another.
Hi, I'm Constance. I'm actually a co-founder of a startup, and I came from the Entrepreneur First Incubator program. And so I see, like, since we got into that program, we understood the space a bit more. We see a lot of these, like, incubator programs that are coming up. YC is turning out thousands of companies each year. Techstars is coming up. Sequoia just launched their own. And, like, we've saw, like, competing incubators coming out from both VC firms and corporate companies and stuff. They're all buying into this hype. What, as investors, what do you believe or what do you see in the effectiveness of these programs pushing out quality startups? And what do you think is their impact on the ecosystem as a whole?
Well, I'm well aware of Y Combinator, and there are many analogs to it around the United States. And people think of Silicon Valley, but we've got Silicon Alley in New York City. You've got Austin. You've got Raleigh-Durham. You've got centers in all the American cities. But it feels to me like right now there's kind of a bubble in tech in the United States. My companies who are going to market for their A and B and C rounds are raising much more money than they could have before because new venture, I mean, if you're not starting a $400 million venture fund these days, you're nobody. I mean, everybody's doing it. So I'm not sure what to say about these incubators. I think many, and accelerators, I think many of them are going to disappear when the bubble bursts. But what, maybe, press on. Ask just one more aspect of it, because I don't feel...
So they argue saying that because either we've started companies before or we have particular industry deep expertise, therefore we will super handhold you as a company. And then obviously like invest some money with a very valuable or like very low valuation into these companies. And they just keep churning out these companies year on year. And so we're sort of now part of the system. And we want to see, because you guys come from, I imagine, more traditional VC backgrounds. And so like we want to know, like, how do you guys feel about this trend that's now happening?
Well, I mean, I personally don't care where a company comes from, whether it's from an accelerator or a friend introduces it. I usually like some way to trace the history of the people. And we look for people who have worked together before, who have relevant expertise, who maybe ran a lemonade stand when they were 5 years old, who showed earlier entrepreneurial proclivities. But it's all about the people as opposed to the provenance.
Yeah, actually, to your question, China offers probably the best reference point because, like, the 30+ provinces in China, plus hundreds of cities in China, all wants to be the next digital economy center. So they are, just like all these, what you described, right? Every place sets up incubators, sets up policies to compete for talents. I guess it's very good for startups, but in the end, right? We have seen still things only really sort of boom in a few large centers.
Thank you. I'm sorry, but we have to leave it at that. Thank you so much, Winston.
Yep.
Ken, Jonathan.
Thank you.
All right, we're going to swiftly move to India now, where the paradigm is changing very rapidly. I'd like to invite Harjiv Singh, who's going to be moderating the session between Vani Kola and Anshuman.